everyone. Joining us again for a update on lending in these somewhat challenging times is our good friend Sharon Eastman from Big Horizon Mortgage. And we all have buyers out there that either have the means to buy or need to purchase or sell in this market. So the fact that rates have been at this historically low number for so long, and it sounds like it's going to continue to be that way for a long time, really has created opportunity for a lot of people to purchase if they have the means to do so. So when things stabilize, that they can move forward, what would be a logical first step at this very moment in time for somebody to do?
So always the first step is pre-qualification or pre-approval. Quickly, a pre-qualification is done. I generally do them over the phone and I ask people questions and I get their information and then I tell them whether they're qualified or not. Pre-approval is when you actually fill out an application and we run credit and all of that so we can know for sure. But depending on the situation, you don't always need a pre-approval, and sometimes they're not even, we're not even able to get them for you. But the most important thing is, especially if you've had a pre-approval or a pre-qualification before, is to update it, because things might have changed in your situation because of what's going on in the world.
Why are those pre-qualifications or pre-approvals so important in the home buying process?
Oh my God. And it also can really fine tune for the buyer, you know, what they really should be looking at. Sometimes people are super tight and the pre-qualification, pre-approval is super important and we have to make sure that they can't exceed a certain number. Other times it's less important because there's plenty of income there, for example. But it can be critical, and of course it makes both the realtor, you, and the seller know that you're qualified and can get to the finish line, basically.
I have found people sometimes, while it does set that bar, you know, this is what you can afford in a home, so we know where to target our home search and what price point, and then sometimes better what neighborhoods or what towns. Is I've had people say to me on more than one occasion, look, we were pre-qualified for X, but we really want to stay at Y. We don't want to be house poor. So in my mind, it really, as much as it helps me, it helps them set a budget too, so that they know how they're going to be living, you know, whether they can make it on one paycheck or, you know, they need the two, or whether they're going to have a buffer. So
it's funny that there's a question I asked people. I said, do you want to know how much you can borrow, or do you have a price range that you would like to see if I could qualify you for it? Mm-hmm. Because sometimes they don't want to borrow that much, just because they could borrow so much more. They don't want to borrow it.
Yep. So before somebody picks up the phone to give you a call to get pre-qualified or that pre-approval letter, you know, and then before they call me, what documents should they have ready to go to make the pre-qualification or pre-approval process much smoother and less stressful on them, because they don't have to go back searching for anything? Are there some highline items that we can think about and just say, this is what you should have ready to go?
So generally, when we're qualifying somebody or they're borrowing money, we want to know importantly what their income is, their assets are, and their credit are. Think of it as a triangle. So we figure out their credit just by running their credit, but assets and income. So asset is if you're putting 20% down or 5% down or 50% down, where are those assets held? And I need to see 2 months bank statements. All the time people try to give me a screen print or a transaction history. We need the actual statement, and I know people don't get them in the mail anymore, but you can just go to the PDF doc center of your bank and save them. So that's one. And then income is your W-2 and your most recent pay stub. Unless you're self-employed, then it's generally tax returns, or if we're using some sort of rental income to qualify, then it's tax returns. If you're an hourly wage worker or tips or commission, we have to do what's called a verification of employment, which your employer has to fill out the last 2 years, because we have to average things to figure out what your actual income is. People say to me all the time, well, I make $22 an hour, but $22 an hour at 45 hours versus $22 an hour at 32 hours is 2 different types of income.
Right. Okay. knowing that those are the documents, and in some rare cases where you need tax returns, because the process has become a little bit more challenging and there are certain things that lenders are looking for later in the game, what documents, or would it make sense for people to keep sort of filling that file folder and updating it on an ongoing basis so that when you ask for it, the document's there and it doesn't become this panic situation, or until they can get around to it, hold up the loan process?
Yeah, so of course, people are losing their jobs, and one of the big things that the employers want to know, I mean, the lenders want to know, is that you're still employed. So one of the overlays or new requirements that I've been asked for is making sure that the pay stub that's in the file is no older than 30 days old when the loan closes. So if we start 60 days or 45 days prior to the closing, I'm going to need to ask you for that closer to the closing. And that's something I didn't have to do before, because if you're employed, and we would do a verbal verification at the end and know that you were employed. But now they're asking for a pay stub because it might show a decrease in hours, or a decrease if you're salaried, for example, and your pay is always X, and all of a sudden you get a pay stub that's now a little lower, then we have to look into it more.
Okay. And we talked a little bit about rental income as a source of income for people. And lenders are sort of saying, no, we can't use that. Is that the case?
I think it's not going to be the case with everybody, and in some cases, if there's a signed lease, but the minute there's forbearance on rent, or some way that people don't have to pay rent, I mean, when you think about lending in terms of risk, investment property is the riskiest, then second homes are the next least risky, and then primary homes are the least risky. So if you fall on hard times or something and you're going to let one of your houses go, you're going to let your investment house fall first, and then your second home, and then your primary home, because you got to live somewhere, right? So you don't want that to happen. So this is how lenders are looking at investment property right now. And in fact, if somebody called me today to borrow to, buy a 4-unit that they're not going to live in, I don't know if that's, if unless they have a ton of income that's guaranteed that they can carry it without any of the rents, that could be a challenging purchase for right now.
Okay.
And it might only be that way for a month or 2 months.
Mm-hmm.
And then that market picks right back up, later on.
Okay. When a buyer is out there, if they decide to move forward now after they get the pre-qualification or the pre-approval, what kind of timelines are we looking at for them to close? I mean, secondary to finding a house, what kind of timelines?
I would say put 45 days or more in your contract. I mean, we can easily close a loan usually in about 30 or 35 days. But right now, when we're not sure if appraisers can get in houses, some appraisers, are not willing to go in houses if you don't get an appraisal waiver. And so I would say 45 days is a pretty safe time frame now. I do have a couple lenders who are insisting on 60 days in a contract. That's just because they have less staff, or just the volume. They just aren't sure, if people are out or working from home, that they just can't, handle the volume as quickly as they.
Are you finding that there's some of the lenders, the smaller lenders, their staffs are working remotely and the lobbies are closed, and
yes,
it's making it more challenging? Okay.
And the big lenders, I mean, most people are working from home. So even if you are, even though lending and banking is an essential business, there are a lot of people who can do their job from home. If they're, qualifying people or underwriting a loan, they can do it from home.
Okay. You and I always say that, for myself in working with you, one of the things that's always been a bonus for me is that if there's something I need, even if it's on a weekend or on an evening, I can get my hands on you, so to speak. And I know that you said that a lot of the mortgage lenders that you work with, you have those sort of the same relationships. Are you finding that more challenging? Is it has it slowed down the process because of the fact that people aren't in offices, they're working from home? There's maybe fewer of them. Has that impacted you at all?
I have a couple of local lenders whose underwriting has really gotten longer.
Okay.
So going from a 4-day turnaround time to a 7 or 8-day turnaround time. But I would say overall, my lenders have been really amazing in responding, and I haven't seen much in additional turn times overall. Like I said, there are a few. But mostly, they're in the same boat that we are. They want to help people. They want to get the loans closed. They want to make sure people get their houses, and we want to make sure that. So we're all kind of, I've been working a lot the last month. It's a time to get things done for people.
So again, the message I'm hearing is you got the pre-qual letter. You're out there looking for houses. You get something under contract. Patience and understanding that things aren't maybe going to move as fast as they normally would, and that lenders are going to be asking for potentially more. So while the whole process can be stressful, anything that they can do to keep their files ready, get you information when you need it, and then all of us communicating is going to take the stress level down and get everybody to the closing table. Speaking of closing table,
or you mean the closing hood of the car?
Closing hood of the car. So interesting. I mean, we're doing closings, and Janet Mills has some pretty strict guidelines in place for real estate as essential businesses to continue to serve their consumers. Whether it's me doing virtual tours before somebody can actually go in and look at a house, to getting them in, getting them on. We're doing everything remotely, which we've to some degree been doing for a very long time, but we're losing that human touch a little bit. Tell me a little bit. Have you experienced a closing since the governor has placed things where we have to do the physical distancing and?
Yeah. So one of the things is that we're not allowed to go. As your mortgage representative, I'm not allowed to go. And I believe that realtors aren't allowed to go. Isn't that true? I mean, you can sit in your car in the parking lot, but you can't. The traditional thing is we all go and we sit around a table and the buyers, sign papers. It's happy and it's awesome. And the sellers give them the keys. And obviously the less people that are together, that's what they're talking about. So I have heard of a couple closings outdoors. And in fact, I have a reverse mortgage closing in about a week and a half that we're expecting to do on the guy's picnic table outside at his house. It's really, but also the closing agents that I work with, have a kind of a strict protocol, and what they've been doing is calling the borrowers the day before closing and asking these various questions like, are you sick? Things like that. And this is how we're going to do it. And one of the other cool things that we've almost never done is that they're emailing the document package to the borrowers beforehand, the gigantic package that they usually come in and they sit down, they go, oh my gosh, this huge package, we have to sign it all. So they're getting to review it all so that when they're in the actual signing part, it's chop, chop, chop. It's no discussion about what this form is and that form is. So I think that's and actually I think that's something that should stay. So that borrowers aren't faced with this big pile of papers that they've never seen before.
Right. No, I agree. I think that's an excellent idea. And I know, that sellers and buyers are not in the rooms at the same time.
Right.
They're bringing them in separately. I have one coming up with somebody from New Hampshire, and they're going to close in New Hampshire, and the sellers are going to get their documents here. So it's going to be completely remote, which it's a little bit harder for me because I like the end result. I like to be there. I like to see everybody be happy, but it, it's just where we are now, and we'll have to be happy with them over FaceTime or something. So,
right.
So again, this all goes back to risk and the risk of lenders. So pre-qualification and the pre-approval letters and rates are all tied to the risk of the buyer and what the lender's willing to take on. And
if you've got a pre-qualification earlier in the year, for example. Sometimes people call me in December, get a pre-qual, and then all of a sudden they'll call this week and say, I have a house. Well, you need to get your pre-quals all updated and your pre-approvals updated on a pretty regular basis if you're looking, just because things are changing.
Yeah. And that just goes back to the point that I made earlier. Keep your financial folder updated so that it's just easy to, if you say, I need this, it's there and they're ready to go, or they know where to find it. So because it can be challenging and stressful. You know, we've all had people that on top of just finding the house, the whole mortgage loan process can be very stressful for them. So sort of to wrap this up and put a little bow on it, what's our takeaway that we can give consumers out there that are looking to buy or get ready to buy when things stabilize again?
Well, kind of the experts are saying that rates should be low for kind of a long time. Now, whether that's 3 or 4 or, it's not a specific interest rate, but it's just knowing that we're going to be in a good low rate environment probably for a good long time, which is great to know. And all challenges create opportunities, and that's opportunities maybe to buy if your job is secure and, you're ready. And I think that that's what we all have to take into this period, because there's so much unknown and we have to be, surviving this time, both at home and at work.
Yep. And whether it's you or another lender or myself or another broker, know that we're all in this together, and our goal is to get you what you need. So this video is to just help you be a more efficient partner in that whole process and decrease the stress level for yourself. So, but we're here to help. So thanks again, Sharon. It's so great to talk to you, and we look forward to the next time.
All right, sounds good.
Bye. This has been a production of Mainely Home Matters. A special thanks to our guest, Sharon Eastman from Big Horizon Mortgage.